Welcome to today's video. My name is Madelon Vos and this is Madelon Talks. Today we'll discuss the most important macroeconomic and Bitcoin related news of the week. And we will start off this video by diving deeper into the future of our money. We will going to dive deeper into the central bank digital currency and how the world will look like when a central bank digital currency will be released, when it comes up to the digital euro, a digital dollar, or maybe even the digital yuan. What will the world look like when there is going to be a central bank digital currency? We will also take a look at the war on Bitcoin, because last week I tweeted about the fact that the war on Bitcoin has started, and this raised a lot of concern and a lot of questions as well. So I will explain a bit why I kind of have the feeling that the war on Bitcoin just have started. And we will also take a look at some crypto related news as well. And in the end of this video, we're going to dive deeper into the latest price analysis of Bitcoin, but we will take a look at the OnChain analysis when it comes to Willy's analysis. We will take a look at the Wyckoff pattern, and we will take into account the stock to flow model of Plan B. So we will combine all these four kinds of analysis together to see whether we can expect a leg upward or the next leg downward. So for now, I'm going to put myself in the right corner of this video, and please check if you haven't subscribed to this channel yet, make sure to do so. And if you already subscribed, check down below if there is still an option to subscribe again, because I've had a lot of comments from people that were saying, I have subscribed to your channel already, but I must do it again because suddenly it was deleted or something like that. So make sure to do so. Also check it if you have subscribed already, and make sure to click on the bell so you get notified when there is a new video online. So I would like to start with this news article, and this is a news article from RTL News, which is the biggest news outlet in the Netherlands when it comes to commercial news. They're doing a suggestion. They're saying, what if every Dutch citizen will get a CO2 budget for traveling, for eating meat, and for energy? There will be a maximum CO2 amount that you can spend. And for those who exceed this maximum consumption, they will have to pay more. So, to be honest, this article gave me goosebumps, and I will explain you why. Because in order for this to work, there need to be some changes. And for example, if you want to measure how much CO2 we are consuming together as citizens, then you will have to get rid of cash. And this means that you will have to introduce a so-called central bank digital currency, and that you have to make sure to connect the central bank digital currency to the CO2 budget. And then we will have something that really looks like the Chinese so-called social credit system. Maybe you've heard of the social credit system in China. In China, there is something that's related to how good you are as a citizen. For example, if you have done something wrong in the eyes of the government, then you can't go by train to work because your social credits aren't enough, for example. And this almost looks like what we're seeing right now, or at least what they are thinking about right now, because this is not a plan of parliament. This is a what if scenario, but still it gave me goosebumps, because where will be the privacy involved? Will there even be something that's related to privacy? And to me, this is really, I don't know, it's a bit strange. And I've tweeted about this because I want people to realize what will happen when central bank digital currency will grow bigger and bigger and bigger. For example, they will probably introduce the central bank digital currency as following. They will say, you will get 100 euros or $100 in your central bank account. And if you open a bank account, you will get free money. Probably they will do it like this. And then you will think, okay, that's nice. I will open a bank account in the central bank. I will get free money. And then they will ask you to move your money from your commercial bank to the central bank as well. And from that point, it's really harsh to get out of the system. Because when your money is entering the wallet of the central bank, they can make sure to give you restrictions. For example, spending your money on products that are having CO2 consumption. And they can also do this, for example, you have to go to the doctor quite often because you have a higher blood pressure. Then they can say, you shouldn't eat at McDonald's every week. And this can get really out of hand really easily. But on the other hand, there's also something else, because inflation could rise endlessly. If there is something introduced like the central bank digital currency, we will get rid of cash and we won't use commercial banks for doing our daily savings and spending, then it's really easy to have inflation going higher and higher and higher. We have had Lynette Zhang talking about this really often, and in my honest opinion, she's completely right about the future of money when it comes to inflation. The central bank can't do anything about monetary policy when it comes to policy tightening or something like that to lower the inflation rate again. So this is going to be really hard to measure when it comes to the central bank digital currency, and there will be no way out of the system anymore, because they just can't restrict you to not buy Bitcoin or not buy gold and silver anymore. So keep that in mind when thinking about the pros of the central bank digital currency. There are also quite a lot of cons. And so it begins. The central bank digital currency will get a full backing of the Bank for International Settlements. And this is just the beginning. The Bank of International Settlements, of course, has no backing. We know there isn't gold in their basement or something like that, so they aren't backed, but the central bank digital currency got backing, or at least confirmation, from the BIS, the BIS. And then we had this tweet. I tweeted about this and a lot of people retweeted it because they were like, oh, what are you telling us? The war on Bitcoin has started. And to me, this is a really important point in time, because we are at the verge of a bear market, bull market thing, and we know we are sitting there. And there is also a lot going on around the central bank digital currencies, inflation rising, central banks having no equipment to tighten policy anymore. The interest rates can't go any lower. They have to let the interest rate rise again, but then the whole system will collapse. So there are so many things going on. And one of the things is that Bitcoin is starting to evolve into a more systematical threat. So it can become a threat to the system. We've seen this, for example, in Turkey. In Turkey, the lira had an inflation rate of 16% in 1 month. 16%. So the purchasing power of the people in Turkey went down by 16% in 1 month. And this means that a lot of people that worked in supermarkets, that had their own companies, said, I don't want your lira anymore, because tomorrow it can be, the value can be way lower. So what did they say? They said, just give me Bitcoin. I would prefer to have Bitcoin. So people were starting to spend and get Bitcoin. So people paid in Bitcoin, and there was a complete separate economy evolving besides the economy around the lira. And that raised a concern about the systematical threat that Bitcoin formed. So what did Turkey do? They said, we can't deal with these transactions anymore, so you can't do any transaction when it comes to Bitcoin. And that's the backstory, the story that they don't tell, the story that they don't tell to the people. They are talking about, of course, they're talking about terrorism financing, about everything, but not about their economy failing. And that's what this is all about, because we're seeing that our economy is going down the drain when it comes to Europe, but also when it comes to the American economy. And to me, the war on Bitcoin has started because we are currently in the final phase. And when I talk about the final phase, and you've probably heard about this, because there's a saying that says, first they will ignore you, then they will laugh at you, then they will try to beat you, or at least they are going to get mad at you, they're going to get angry, and then you will win. And we're currently in this phase that everyone's starting to get mad at those countries that are quite open-minded when it comes to Bitcoin. So we're currently in the final phase in which countries will embrace or ban Bitcoin. The countries that embrace Bitcoin are oppressed. So when it comes to the IMF is oppressing El Salvador for the fact that they made Bitcoin a legal tender. The good thing about this is that Bitcoin is a form of value in both their eyes, on those embracing, but also on those banning it. And I must explain why this is true, because have you ever heard of a war being started around homelessness? No. Wars start because of something valuable. Think about wars about oil or the war on drugs. The war on Bitcoin has started, and this means Bitcoin has value. It has value in the eyes of those embracing it, but also of those banning it, and they know it. And there is a lot going on when it comes to banning Bitcoin or making restrictions for the crypto asset market. There is a new directive in Europe, the regulation of the European Parliament and of the Council on Markets in Crypto Assets, and amending directive for the EU. So they did a proposal around the fact that they want to regulate Bitcoin, but also the crypto market, and not only the cryptocurrencies, but they want to regulate everything. Also when it comes to the decentralized exchanges, when it comes to the privacy coins, the stable coins, the utilities, the assets, the currencies, is everything all combined. But I'm still not sure if they already know what the difference between all these different assets, as I would like to call it, is. So first they have to know where to put which token or which coin in which box it can live, but then they will try to regulate. And this, of course, is the basis for the other countries in the European Union to base their regulations on. So this is going to overrule everything, and we are looking at this really closely. But for now, this is just a proposal, but in my honest opinion, it doesn't look good. They aren't really open-minded as when it comes to crypto. So what a lot of people don't know is that Bitcoin isn't completely anonymous. It's pseudonymous, which means that you can track whether where money is going, but not who's sending the money. But if you have at the front portal of the money flowing in and the money flowing out, the on and the off ramps, if you have something that's measuring where the money is coming from, then you can follow the money around the system and it's not that pseudonymous anymore. And to me, it's really nice that the blockchain is completely open, so there is no need for this proposal. But okay, we will see where this will end up. Also, on the other side, we have had some changes when it comes to America. Cryptocurrencies are now on FinCEN's first national property list. What does this mean? The Financial Surveillance Agency is pointing a finger at crypto in its new plan to combat terrorism financing. And to be honest, this is completely nuts. When it comes to criminal transactions, criminals won't use Bitcoin, because if they would, they're stupid criminals. In 2020, only 0.34% of the transactions were linked to criminal activities or could be linked to criminal activities. And to me, this is not about terrorism financing. This is the same story as we've seen in Turkey. Turkey banning cryptocurrency payments because they were scared that there would exist a completely new economy. There would evolve a complete new economy around Bitcoin instead of their own currency. So they are seeing Bitcoin as a threat, and that's why they are planning to combat terrorism financing. But okay, enough said about this. We're going to follow this really closely. And then we've had this report from the Financial Action Task Force talking about extreme right financing highlights with cryptocurrency use. So they will have another reason to ban cryptocurrencies because they've used the so-called privacy coins for financing their extreme right thoughts. Or at least that's what the Financial Action Task Force is saying. We've known from the beginning, or at least 1 year ago or so, that the Financial Action Task Force would take action on when it comes to cryptocurrencies. So, as I said, we're going to take a look at this closely. There will probably be a European and an American regulation form, but there will also probably be a worldwide form of regulation when it comes to cryptocurrencies. And we must see where this is going to end. To me, this is not really nerve-wracking or something like that, but it's strange that they are going to do this. And we can see where this is going, right? Especially when it comes to the central bank digital currency. But keep in mind what's going on and take this into account and never get nervous about this, but know what your options are. And then we had this announcement from the NYDIG. They're saying in the coming months, 650 financial institutions and millions of consumers will gain access to the powerful Bitcoin network. We're proud to come together with these innovative companies to help make Bitcoin accessible to all. So they're announcing that 650 financial institutions, including banks, will make Bitcoin accessible for their consumers. And they must, because they have no other option. And this is really important because the banks know that their business model is going down the drain. And maybe in the future, we don't even need banks anymore. And everything will go to some sort of crypto lending formula. And when speaking about crypto lending, we've had BlockFi doing a rate cut on Bitcoin deposit. And this leaves their rivals scratching heads because BlockFi is saying that the market conditions have changed, but they're the only ones in the space when it comes to lending Bitcoin. They're literally a Bitcoin bank, but they're the only ones that decreased their APY, and the API is the annual percentage yield for the Bitcoin deposits larger than 20 Bitcoin. For example, it will go down from 0.5% to 0.25%, which is actually quite low. When you will have more, or at least when you're in tier 1 and you will have 0.25%, then your annual percentage yield will be higher. But still, it's not super high when it comes to having more than 5 Bitcoin. But the other ones, and this is quite interesting, the other lending platforms, for example, Gemini, and Genesis, and we've had Nexo, they didn't decrease their rates. So this is quite interesting, and we will follow this around the next month. We will take a look at whether they cut rates again, because that would, or at least might, ring some alarm bells. Then we had the month June, and June has ended already. We're now in July, and the weather sucks. It's raining, it's 13 degrees, and I'm thinking about moving out of the Netherlands again, because this is not really my piece of cake. I'm already turning white again. But okay, let's take a look at the assets and the performance of that crypto assets when it comes to the top 20 list by market cap. We've Bitcoin on the first place. So Bitcoin is outperforming all of the other crypto assets when it comes to the month June. Bitcoin is doing the best at a minus 2%, 2.7%. But we're also seeing that XRP went down with 30%. So even 28% more than Bitcoin. BCH decreased by 25%. We've seen EOS decreasing by 35%, and even Ethereum decreased by 17.7%. So Bitcoin did way better, and this means that the market cap of Bitcoin will increase quite a lot, or has increased quite a lot, because everyone is moving out of alts. When Bitcoin is going down fast for quite a long time, everyone moves out of the altcoins, back into Bitcoin, or maybe even back into stablecoins as well. And now the big question is, what will happen next month? We've had a month of a strong decrease when it comes to May. Then we had June with a small decrease. And what will happen in July? The Bitcoin hash rate stabilizes after the China crackdown. And this is what I said in the last video. There was so much there were so many people that were kind of scared about what was going on in China, because China banned mining again. And every Chinese miner had to get out of China, and the hash rate went down. And usually when the hash rate's going down, people are going like, why is the hash rate going down? Price will go down as well a bit. But this will end up being in a normal situation, because these miners will move out of China. They will find a new spot to put their mining equipment, and they will start over again. And I was like, aren't people seeing this? This is completely nuts. But the Bitcoin hash rate stabilizes after the China crackdown, with the Bitcoin hash rate stabilizing after falling for 10 days. The industry experts are speculating that the worst fallout from China's recent mining crackdown might be over. Exactly as I said. So the panic when it comes to the price decrease from Bitcoin wasn't needed at all. And then we have this article, and when I clicked on this article, there wasn't much information. Kevin Reynolds is still writing information about this subject, but what I wanted to say is that the Soros fund manager is said to be trading Bitcoin following a report. The approval to trade the leading cryptocurrency was given by the CIO, so the Chief Investment Officer, Don, according to the report. So there is a report released by Soros, the Soros fund, and we've heard about this fund earlier, and they are now trading Bitcoin. This fund, by the way, is not connected to the Soros family. Good to know, but they've spoken about Bitcoin earlier, and it's quite interesting. But because we don't know when they started buying Bitcoin and at which price they did. So we're going to dive deeper in the report when the data will be released. I will also put it on Instagram as well, or on Twitter. So make sure to follow me over there. I will put it down below in this box. But this is quite interesting. So there is still some institutional interest from institutional investors. And then we've had news from Willy Woo. And Willy Woo said the following: Rick Astley holders key force again, and OnChain analysis suggests a recovery. So you're probably thinking, Rick Astley? You know Rick Astley because he's the singer of the song 1980 song Never Gonna Give You Up. Never gonna give you up. Okay, enough. He's the singer of that song, and what Willy Woo said, those that are never gonna give up on BTC are still accumulating according to the analysts. So they've been looking to on-chain analysis, and there is a difference, by the way, because Willy Woo is a technical analyst, but technical analysis is based on formulas and a form of pattern analysis. You have to see those in a different light because pattern analysis is really subjective, and when it comes to formulas, it's really objective. So for example, when you use RSI, it has a similar, it just has a formula that's being used on every chart, and it uses the index figure of the RS, so the relative strength, and you can calculate the relative strength on every chart on the same figures when using the price difference of the last days. You will get the index figure from it. So the RSI will do the same on every chart you're using it, but on some charts it works, on some charts it doesn't, and on some charts you have to combine it with other tools as well, some objective, some subjective analysis. But when it comes to on-chain signals, they're looking for for example, the whales, the wallets of the whales. Are they still accumulating, or they're looking for new wallets, or they're looking for transactions? How many transactions have been done? So when it comes to on-chain analysis, there is so much data available, but not a lot of people use it. So technical analyst Willy Woo believes that this is not a bear market because on-chain indicators are signaling a recovery, and the asset is still being bought by the long-term hodlers. So what he has done is looking at the wallets from the long-term hodlers. These wallets are, in my opinion, above the 1,000 Bitcoin. And if they still keep accumulating Bitcoin, then they're buying from the weak hands. And Willy Woo says that this is what they're doing. The popular analyst came in an interview on the What Bitcoin Did podcast last week. Willy Woo stated that he does not believe that Bitcoin is in a typical bear market due to the signs of accumulations showing on chain, referring to the Ricky Astley song, Never Gonna Give You Up. So the Rick Astley is the hodler that keeps buying and never tends to sell much. And of course, Rick was very active over 2021, and then suddenly all the coins moved away from Rick to the weak hands, the speculative traders that buy and sell. Now we're seeing that cross back into moving to Rick. He added that we're currently in a speculative phase, and I agree to that, but we will explain that later. And those coins that were sold earlier this year are now being absorbed by long-term hodlers. And the podcast host, Peter McCormack, revealed that he hasn't sold any crypto assets yet and is still confident that there is still so much going on and good stuff happening. And I completely agree to that. But usually we see that there is a form of value and a different form of price. So price and value are currently most of the times not at the same level. When it comes to price, the price can be way lower than the value already is. We've seen this in 2018, we've seen this in 2017, we've seen this in 2014 after the crash in 2013. and there was so much positive news, but the price wasn't moving a bit. The price right now is going sideways bearish. To be honest, we're in a downtrend. It looks like a Wyckofian accumulation price pattern, and so if that plays out, we should have the last wick down to 28.29, which should have been the final test of the bottom. Everything on chain looks like recovery. So he's seeing positive signals when it comes to the recovery. And we are going to take a look at the Wyckoff in like 1 minute, but I wanted to show you this is the Bitcoin exchange supply ratio at the lowest point in 6 months, implying less sell-off risks. Because when everyone is moving their money into the exchange, they are probably willing to sell it. And right now, the exchange has kind of dried out. And when it comes to the Wyckofian phase, I wanted to show you this chart. This is a chart of the standard Wyckoff pattern. And this Wyckoff pattern has been discussed over and over again. We first saw the Wyckoff pattern at the top, and now we're forming a Wyckoff at the bottom. And this is a chart from the 30th of May. We're now in the 1st of July. So this is a 1 month ago, a little more than 1 month ago. And I wanted to show you what has happened since. Take a look. This is where the low existed. This is where we found the first high. So it was like 1 centimeter, 1.5 centimeter later. Here we had the same thing. We went up, we went down, we went up, found the top around this area. Then we went down, we had the spring low around 29, and now we're moving upwards from the 22nd of June. And this is gonna be the upward trend. But this is the upward one. Now we're in the downward again. This is probably downward, and we have to run up towards the 40s again. So this is where it becomes kind of interesting, because over the couple of next 2 weeks, we want to see that the price of Bitcoin is going up again, up, up, up. And we've had this tweet of Plan B. The closing price of June was 35K. As far below the S2F model as in Jan 29. In Jan 29, we were sitting around this area right before we went upward again, but never hitting the high again, because this took 1.5 years, I think. We were in the bear market at that time. So we can't compare that. But the next 6 months will make or break this S2F again. And he's said this before. He's said this over and over again from the time he announced the stock to flow model, and I think it was in the beginning of 2019. But now we have to move upward again, somewhere around this area, in order to don't break the stock to flow model. So I completely agree with Willy when it comes to the fact that we must have seen the bottom right now. So this area, the 28 area where Willy spoke about in this podcast, and this was published on the 28th of June. This is where we've seen the low on the chart, and now we're heading upwards again. We're currently sitting around 33K, and now it's necessary to move upward, because otherwise the stock to flow model will break, the Wyckoff will break, and we will break. So for now, we're going to take a look at the technical aspect. So we've spoken about the stock to flow model. We looked to see what the Wyckoff wants us to do, and we also watch Willy Woo's on-chain analysis. But for now, we're going to do some technical analysis as well, because where are we sitting right now? We are currently in this area, sitting around the 32, 33 USD, and the volume is quite low. So this almost looks like head and shoulder pattern or something like that. But we need to break out upward around this area. Okay, so what have we seen? We've seen a downtrend after we broke out of this head and shoulder pattern. And what I want to show you is how accurate this analysis is. So we had this head and shoulder pattern, we broke out, we hit a low around this area, and then we ended up in this downward sideways, always sideways trend. We broke out upwards, but the volume was way too low. So we broke out downwards back into this area again. So now we want to see a breakout with high volume, but we aren't seeing high volume yet. And when it comes to the Wyckoff, we have some support around this level. So I'm going to draw this around the 1 hour chart. We have some support around this level. Yeah, we have. And then we're seeing that this is kind of looking like an upward movement. But we want to see higher volume. So if we break out again, we need to see higher volume. And then we can go back as high as 39. I will show you where we need to be at least 39.40s. This is where the resistance is heading. Here we have resistance as well, have had, and we're probably going to see this again right before moving sideways and then upward again. So this looks kind of good. The only thing that we're missing is the volume. Volume needs to be way higher when breaking out upwards. So when hitting this upward trend, I want to see higher volume than the average. The average is the yellow line, so we want to be right above the average for at least 2 days to have the confirmation. And now you're probably asking me, where do we see a confirmation? For example, this is kind of confirmation. We broke out, here we broke out again, and then we see that we've had like, I'm saying days by the way, but these are candles of 4 hours. So for at least 2 candles of 4 hour, we want to see upward green volume. This was a not really high volume. So we might speak of an upward trend. It can also have some resistance around this level, but we're still not sure yet because these have only 2 touching points. And when it comes to technical analysis and drawing lines, you want to have at least 3 for it to be a strong resistance line. And the more touching points, the stronger the resistance or the support. The longer the resistance support, the stronger it is as well. So these are all kind of strong ones, even though we've broke out upwards, blah, blah, blah. So now we're at a very important level because we don't want to break out downward of this area. And if we break out downward, then we will see high volume going down, going back to maybe even 27 or so, 28 probably, finding a new low, and I hope we're not going to see that. And when it comes to breaking out of this trend, this is a great shorting opportunity. So if we break out downward, then we will definitely see high volume because everyone is watching this line right now, and this will be a great opportunity to short. If you have experience in the market and if you are experienced with doing leverage trading, then this might be the chance for you. If you are interested in doing leverage trading, check the link out down below. If you don't have experience in leverage trading, make sure to first educate yourself before you start doing this. So this is a great shorting opportunity, but of course we hope that we break out upward of this downward trend and we can start looking forward to the 40K again. For now, I would really like to thank you for watching this video. I've enjoyed making this video again for you guys, and make sure to follow me on Instagram and on Twitter so you will get notified when there is new content available. You will see what's going on behind the screens, and what we're working on is also quite interesting, I think. And for now, I'd like to thank you for watching this video. I hope you've enjoyed it. I did, and I hope to see you next week again. Bye bye.